Hi, and welcome to our new edition of Technically Speaking. My name is Violeta Todorova, and I'm Senior Market Analyst at Legacy FX. The Russia-Ukraine conflict and the rising inflation around the world continue to move the price of gold higher. These two fundamental factors dominated gold's current rally to $1,879. Surging energy prices spilling over into broader markets are causing inflation to continue to spiral to higher levels. Most recently, the Producer Price Index report released by the Bureau of Labor Statistics revealed that wholesale prices had increased 1% in January, taking the year-over-year to an increase of 9.7%. The report shows an increase in costs to corporations producing goods and services will be reflected in higher prices on a retail level at some point. Last week, the US government released its Consumer Price Index for January 2022. The report indicated that the current level of annual inflation has risen to 7.5%. This level of inflation marks the largest single-month gain since February 1982. Both the CPI index and core inflation rates rose to levels above economists' expectations. The next report for the PCE, which is the preferred inflation index used by the Federal Reserve, will be released on February 25. The December numbers were released in January and showed a huge surge in inflationary pressures. The PCE for December 2021 is currently at 5.8%. On Tuesday, for the first time since the onset of the buildup of Russian troops on Ukraine's borders, there were signs the crisis could be de-escalating. This was based on statements by Vladimir Putin saying that they are moving troops away from the border. However, the belief that geopolitical crisis was de-escalating could be short-lived. The US doubts Russia's claims that it had withdrawn troops from Ukraine. It seems clear that the major fundamental events which have moved gold to its current 8-month high remain firmly embedded in both the news and, more importantly, the bullish market sentiment for gold as safe haven asset. This is despite geopolitical fears usually being temporary drivers for the precious metal. On Thursday, in the early European session, the price of gold broke above its key resistance of $1,877, suggesting that higher levels are achievable in the short term. The next potential target is 1,916. If that level of key resistance gets broken on the upside, gold is likely to rally above $2,000 an ounce in the coming months. The internal momentum conditions are constructive too, also supporting the positive outlook. That's it for today. Thank you for tuning in and see you next time.